Hello, everyone. Welcome back to FinMeUp. Today, we are privileged to be with Brian Feroldi, who's an expert, in my opinion, in investing. I love his YouTube content and all the content he puts out. You can really check out his channel. So we've got an exciting one for you. Make sure you stay till the end to not miss any juicy content for those who invest in offshore markets, or the US market specifically. Brian, thanks so much for being here.
There you go. Pleasure to be here. Thanks for having me.
Yeah, it's great. So let's get into, first of all, how do you research a company? How do you know when is this company a good investment for my stock portfolio? So there's so many ways you can research, but what is your strategy when you want to decide, is this company worth buying into in my portfolio? Over to you.
Sure. That's a very interesting question, and it's taken me a number of years, lots of trial, lots of error, lots of learning, lots of connecting with other investors to develop the system that I currently have. And this is something that I would recommend everybody listening to this do, regardless of whether or not you're interested in the same kind of investing style that I am, or the timeline that I am. I really recommend the process that I'm about to describe to basically everyone. So I was initially picking stocks semi-randomly, and I was smart enough after a couple of years of trial and error to sign up to become a paying member to the Motley Fool's service, and they have a great companies that make it through their recommendation process are typically higher quality businesses. So I was picking from a pre-populated group of companies. However, I didn't have a process in place that was really allowing me to say, I like this company better than this company. In fact, I was kind of trying to keep everything in my head all at once to be like, wow, this company, it's small market cap and a great gross margin, but it's not profitable, and I don't think its competitive advantage is strong. Whereas conversely, I'd be like, wow, this company, huge, growing much slower, but it's profitable, and it's got a great management team, etc. So I was trying to keep all these factors in my head. What I eventually decided to do was to build my own custom checklist and scoring system that I can use to decide whether or not I think a company is a match for my style of investing. So broadly speaking, what I am particularly interested in looking for is high growth, low risk businesses that also have a market cap that I believe could multiply many times over in the years ahead. So that's a really demanding thing.
Sounds like the ideal situation.
Yeah, and some people think, if you asked me if these companies existed 10 years ago, I would have said no. There's no such thing as high growth or high return and a low risk. But the more I study investing, the more I realize these companies do exist, and we have to be demanding as investors to really insist on everything. But what I recommend everybody that's listening to this do is start by making a gigantic list of all of the attributes in an investment that you would find appealing. Write them down. So for me, I break these down into several different categories. Financially, I want a really strong balance sheet. I want a high gross margin. I want high returns on capital. So that's return on equity, return on assets, return on invested capital. I want positive free cash flow that's growing. I want positive earnings that are growing. Those are the things that really appeal to me as an investor. Next, I take a look at the company's competitive advantage, and I want some type of competitive advantage that I believe will protect that company's profits and growth for many years to come. So this is the classic moat that Buffett always talks about, and the sources of moat to me are network effect, switching costs, cost advantage, an intangible like a brand or a patent. Counter positioning, which is an interesting one. That's basically a differentiated business model. And then I also want a moat that's widening. Then I also want a company that has clear signs of optionality. Optionality just means the ability to roll out new products or new services that I can't foresee that open up new revenue opportunities for the company down the road. I want high growth. I want it to be organic growth. I don't want it to be based on acquisitions. I want operating leverage in the business. I want low customer acquisition costs, high customer dependence, so they're going to spend with the company no matter what's going on in the economy. I want recurring revenue, pricing power. I want a founder running the company. I want high inside ownership. I want a great place to work. I want a strong mission statement. And I want a stock that's already beaten the market. That's a lot. That's really a
Well, I
lot.
mean, it's there. If you look deep enough, you'll find it. So, I mean, taking all of that into consideration, I'm also a big fan of high growth stocks. I actually did this other calculation on Excel, which just shows you if you invest in 10 companies with certain percentages, we'll do a video on that, but with certain percentages, you only need 3 out of the 10 to win, and then you'll actually still win. It sounds quite complicated, but it's not. But anyway, so
It's a lot like baseball, except for it's even better than baseball. So with baseball, you get up to the plate and you swing, and the best baseball players in the world will get out, will fail 6 out of 10 times, right? The best in the world. But if they succeed 4 out of 10 times and they succeed enough, they will be one of the best baseball players to ever live. And the numbers are even better with investing. To your point, you can make 10 investments and 9 of them could fail. If one of them is the next Amazon or the next Netflix or the next Chipotle, you've won. Right? You've won. You just need one home run company to really do well as an investor. But getting back to it, so that's my list of all the positive things, and the number of positive things that your listeners might want could be completely different than my list, and it might incorporate things that I don't care about in there, such as like technical analysis or whatever. But whatever it is, write down what you want in an investment. Step 2, rank them. Force yourself to put them in order based on how highly you value them. So start top to bottom. This is the most important thing, second most important thing, third most important thing, etc. Then make another list, and it's a list of all the things that you don't want to see in investment, right? If a company has this, you are turned off. So for me, that's like accounting issues. If there's accounting issues, you're dead to me forever. Forget it. I don't like customer concentration. I don't like it when a few customers or one customer has a huge influence on the company's revenue. I don't like it when a company is in an industry that is actively being disrupted. I don't like it when a company relies on commodity prices or interest rates or needs a high stock price or a strong economy to do well. Those are forces that are outside of the management team's control, and I don't want to rely on a company having luck go its way too for the company to do well. I don't like high dilution. I don't like when there's a legal ruling that could bust the thesis. I don't like it when the financial statements are complicated. I don't like it when the dilution rate is high, et cetera, et cetera, et cetera. So now we have these 2 lists ranked top to bottom, things we like, things we don't like. Then allocate points to them, starting with the top and going down the bottom. I suggest, for simplicity, you limit the number of points to 100. That's what I did in my system. And I started at the top and I was like, okay, the number 1 factor for me is the company's competitive advantage. I gave that 20 points out of 100. The next most important thing to me is the company's optionality. I gave that 7 points. And I just kept ticking down until I ran out of points. And that's a really useful exercise because it forces you to not only pick the categories, the things that you really want, but it also forces you to weigh them according to how important they are. Did the exact same exercise with the things that I don't want to see. And ta-da, we have our process in place for what matches our investing style and what does not. So I've now done this. I have this process that I've created, and I've now scored hundreds of companies over the last a couple of years. Every time I come across a company that I might be interested in, I take it top to bottom on my checklist. The output of that is companies that are the best match for my investing style. And those are the companies that I buy and concentrate my portfolio in, and the ones that fail or have the lowest scores, I avoid.
that is so valuable. Thank you, Brian. So simplistic. It sounds so good. I just want to go and do that strategy now. So it's always start with investment strategy. Thanks for that. So now that we have your strategy and we just talked about how do you find good companies, what are your personal top 5 biggest holdings in your stock portfolio? So your 5 top stock picks.
Sure. So broadly speaking, let's back up and just talk about the way that I invest. The way that I invest is I take small positions in lots of companies over time, companies that meet my investing criteria. However, I know from my own personal experience that I am a flawed stock picker, just like we talked about before, right? You pick 10 stocks, you can expect a certain number of them to just not work out, just not work out, no matter how high my conviction is. That's the funny thing. Like a company could ace my investing checklist and it could check every box for me as an investor. That does not mean the company is going to be a winner, right? The world is dynamic. Competitive forces are dynamic. There could be something going on at the company that I can't account for. There could be an unforeseen risk. There could be something on the horizon, global macro news that could seriously threaten the future of that business. So knowing that the future is uncertain, what I do is I allocate my capital across lots of companies, and I make lots and lots and lots of small bets. But I will make bigger bets based on my conviction in them. However, I cap all my bets at 3% of my portfolio. From there, it's up to the company to earn a higher spot in my portfolio. So if you look at my top 10 holdings today, they're all companies that are my biggest winners ever, because they have earned a bigger and bigger spot in my portfolio. So in many ways, I didn't pick my top 5 holdings. The market did. The market picked my holdings, right? I gave them a shot in my portfolio, and they did so spectacularly well that they earned a higher position in my portfolio. So with that concept in mind, my 5 top biggest holdings right now are number 5 is Amazon. Right. And that's done so incredibly well for me simply because it's been a phenomenal investment and I've owned it for almost 10 years now. So that company is my 5th biggest winner. Excuse me, my 5th biggest holding. My 4th biggest holding, similar story, MasterCard. Ticker symbol there is MA. That's my 4th largest holding. I have owned that for at least 6-7 years now. And yet again, it has just thumped the market's returns and done fabulously. Number 3 is the company that I've actually held the longest, Google, Alphabet. And I bought that started buying that one in 2009. So I've owned it now for 13 years, and it's been a phenomenal investment. My 2nd biggest holding is a company called Mercado Libre, which is kind of like the Amazon /eBay /PayPal /Craigslist of Latin America. So they're based. They do most of their business in Brazil, Mexico, Argentina, etc.
Before you get into your top one, how does Mercado compare to C Limited?
Mm-hmm. Both are well similar business models of a sort. Mercado Libre started as eBay, right? So they started as just an online marketplace for connecting buyers and sellers, and that's still a major part of the business today. From there, they moved on. They added Mercado Pago, which is their payment solution infrastructure that was used to make payments, and that has grown to be a huge part of the business today. And then they launched a shipping solution, kind of like Amazon did, and then they launched a fintech solution on top of that. So that business has morphed greatly over time. If you compare that to C Limited, first off, operates in a different geography of the world. They operate in Southeast Asia, SEAC Limited. But 2, C Limited, to my understanding, got its start actually in video games with their Garena, and they've done phenomenally well there. And they've used the profits that they have from their gaming industry to fund Shopee, which is their e-commerce platform, and then I forget the name of their C-Money, I think it is C-Money, their payment platform. So the difference there is, I would say C Limited started in gaming and moved into e-commerce and then moved into fintech with a focus on Southeast Asia. Mercado Libre just went right into the marketplace and then moved into fintech. So similar sort of origins, similar growth trajectories, similar sizes, both founder run, both really fantastic long-term performers and huge winners. And both of them have been slammed in the last, say, year or so. So similar on that front.
Is Mercado something you holding for the long term?
I'm going to hold all of these businesses until one, they become such a big part of my portfolio that I'm uncomfortable with them being that big, or two, I think that the thesis for them owning them is busted. So if I see something that threatens the long-term viability of the business, that's when I think about selling, and that's when I think about paring away. But broadly speaking, all of these businesses are doing very well, and I have no plans to sell any of them.
Perfect. So what is your biggest one then?
My number one holding, I wouldn't have believed this 9 years ago if you asked me. My number one holding today is Tesla. And it's my number one holding by a decent margin too. Why? Simply because the stock has gone up so much. So much. I think on a split adjusted basis, my first purchase of Tesla was about 2012 timeframe, like roughly $8. Roughly $8 per share,
Wow.
and it's been a phenomenal winner. I would have guessed that many years ago that Tesla would have done what it's gone on to become. But the company is just a behemoth. It's an innovation machine. It's led by the richest or third richest person in the world, who is an incredible innovator. And you can say whatever you want about Elon Musk, but there's no doubt that he is a spectacular capital allocator, thinker, outside the box thinker, and communicator all in one. But Tesla, for me, my entire position on that is over a 30x return on all of my investments combined. So it's just been such an extreme winner that it's my number one holding. So that's the theme with all five of these stocks. They're all simultaneously my biggest holdings and my biggest winners of all time. And for the most part, I have done very little selling of any of them, and all their businesses are doing so well. I hope I don't have to sell these companies for another decade.
But that's also the beauty of compound growth. You know, once you get in it early and the growth is just going and going and going, it doesn't take a lot for the company to go from a 7x to an 8x. Surprisingly, Tesla is also still my biggest holding, but I only went in 2019. We also posted various stock picks from Tesla since then, but so not.
Hey, good timing there. It went up about 20x since then.
yeah, they are not 20x completely, but almost. So you know, also love Tesla, love the company, and they always say it's overvalued, but then the share price goes up, new financial results comes in, and then all of a sudden it's not that expensive anymore. It's always overvalued, but it always catches up to the valuation. So I actually also love Tesla and all the companies you mentioned. Thanks so much for that. I would love to have you back again soon, Brian. For everyone watching, thanks for watching till the end. I hope you got some value. If you did so, check out his channel, Brian Feroldi. We'll put it in the description. Also, like this video if you found value. It really goes a long way. Check out the other links in the description to join our community. Have a great day, and let us know what you think of these companies. Thanks so much, Brian.
Thanks so much for having me.